All right, good morning, guys. Hope you had a great evening. Good morning so far as well. Yeah, so let's try to forge a good game plan for today. Looks like we might have some mixed day. Not sure about it, but definitely some mixed action pre-market, which honestly makes sense, which honestly is pretty constructive and good to have at this point. So if we look at the cues, right? So first step, price. Hey, good morning, my friend. So yeah, we're just making new all-time highs for the last 4 days. That's what we have. And that's close, but we're making new all-time highs for 1, 2, 3, 4, 5, 6 days now. All right, making new all-time, not closing at all-time high, but making it. So yeah, uptrend above a rising 21-day mid structure, pretty extended. Same thing for QQQE, getting super stretch at 4 and 8 from the 10-week. What I find most interesting is maybe small caps, gapping down a bit this morning. I thought it would kind of follow through better than that. So we had that 21-day mid structure and base structure retest, then good trust, then 3 days tight, small flag, small channel down to retest that swing high pivot. Then yesterday, daily reversal kind of out of that mini channel as well. So I thought that small caps could see some good inflow today. Pretty early in the day, let's see. That could bring some good momentum in the market today. But yeah, as long as we stay above that structure, the setup is still active, still there, right? And if you look at RSP as well, just pushing out of that first kind of small flag after breaking out of a major kind of multi-mount cup and handle. So I think that the rest of the market is definitely looking good, not extended like tech is. But keep in mind that we are in pretty historic market, and I shared about it a bit last night. But the way I see it is I'm trying the most that I can to just play the market in front of me, tracking the leaders, tracking the portfolio, feedback, the names that I have in my portfolio that are setting up another entry, and just keeping my focus there. All right. And that's what's important with discretionary trading, is adapt to the market that you have, right? So usually the market is not that extended. Usually the market is pulling back to the 21-day mid structure in that area, and we'll look at it yesterday with the 2020 recovery and other historical similar trend, and they all came back to the 21-day mid structure, but right now it's not. All right, so I'm keeping risk tight. I'm keeping near below 1%, and I'm playing the market that we have. And the market that we have is, if you look at the indices, you never get that pullback. You never get that entry. So I'm fine to weather the pullbacks like we had mid-April. I'm okay to weather those, and just keep my focus on the liquid leaders and in my stuff. A bit like Mark Minervini says it best, scratch the indices from your desk, from your charts, and focus on the leaders, focus on your positions. And that's what I'm trying to do here. And what reinforces this is obviously the internals, right? Internals keep acting super constructively, all right? So even if there's some weakness, even if there's some stress test, I continue to see that as being constructive, not red flags. And two reasons. First, credit spreads, internals, VIX, continue to act very, very well. That's the first one. And the second one is what we saw with photonics and opticals yesterday. All right, so market is extended. You get leadership group pulling back into their 21-day ME structure, digesting their move, basing a bit for a couple of days to weeks. Let's take AAY for example. All right, it went nowhere for multiple days and weeks. Then you break down from the 21-day ME structure. So you build that scenario in your head that okay, the market is super extended. We have a leadership group starting to break down. It has to be a red flag, right? That's kind of the normal late stage market breakdown type of action. But then all of a sudden you get expectation breaker with those names, and you have AOI, you have GLW, same thing yesterday, shakeout below the structure, then 13% move up the right side. Then you have core, light as well. So you see the point. You have LT market internals, and then instead of the leadership breaking down in an extended market, you get those expectation breaker and buyers stepping in hard to defend those groups and accumulate and breaking them out of the right side. So that's kind of the dynamic that pushed me yesterday to stay engaged with good exposure. Even if the market is extended, I'm still seeing constructive action in leading group. And yeah, that's the part that you need to recognize. And it's not perfect. It's subtle, but at the same time, that's the kind of information that I'm looking at when I'm trying to build conviction in the market. All right, now Brett. So price making new high, super extended. Now Brett, I'm talking about it for the last 2-3 days now. McClellan summation is flat, around neutral, trading around the 10 DMA. The oscillator hooked down yesterday, so very, very flat. But at the same time, we're not extended and overbought Brett's side. So even though that price is making new highs and super extended, Brett is not confirming any exhaustion action or climatic action, which usually comes with some Brett trust or something like that. So two scenarios: either that this Brett divergence is a negative divergence and kind of Brett breaking down and getting thin before the price breaks, and we can continue to grind up. And I'm talking about that for the past few weeks. at some point the market will lack momentum and just start grinding higher, and that's okay. That's healthy, and that's how a trend mature and kind of slow down instead of just breaking down. Or we see some very climatic action with breadth coming back in, momentum coming in again, and we're gonna go overbought on the summation, overbought on the oscillator. But for me, I'm still seeing good setups. I'm still seeing rotation internally. Lately that was software, yesterday that was opticals. Semiconductors are pulling back into their structure and could be reclaiming leadership again. So that's the internal rotation that keeps me engaged, along the fact that we're not overbought breadth wise. So we covered price, we covered breadth, we covered market internals, liquidators, we covered that. Again, semiconductors, I think we can review that right now. So let's go into the Teams lab. And yeah, so you have semiconductors with a pretty nice bounce yesterday. TSEM, for example, of the 21-day mini structure. Intel gapping up this morning, right off the 21-day mini structure. TXN, MTSI. So you see the picture. Leadership group are pulling back into their 21-day mini structure and bouncing off it, not breaking it down. BKSI, it's in the focus list for today. Pull back into 21-day mini structure. Tight inside day yesterday. You can play the daily reversal on this. Same thing with Rocket Lab. It's in focus list. Tight inside day. You can play the daily reversal on this. So I see a question on Rocket Lab. So let's go with that. So the question is, I have a position in Rocket Lab, 70 cost basis. All right, good entry, good job. How much room under the 21 would you give it before a trim on weakness? Yeah, man, that's exactly it. All right, so how I would have played Rocket Lab if I would have that entry. All right. So first, I would have probably trimmed some into that momentum burst. All right, those two powerful days. Then, not sure I would have seen this as extension, but looking at it, maybe taking some 1/5 into strength up there, and then you get this. It's in focus list. That's where I want to engage. All right, and let's take trading view to draw a bit. Whoop, no. All right, so now gapping down. The thing is, though, with Rocket Lab, I think that it might be affected by SpaceX IPO tomorrow. So that's something to consider. Okay, you have that multi-week base breakout. That's basically your cup and handle, right? Your cup, back to a retest of that high, fail, build that handle, then boom, breakout. All right. So what I was saying is, you want to take some into that extension, probably some over here, but that was not a big move, so probably I wouldn't have trim, being patient. And now, yeah, you're right, I'm looking for an entry at this point right here. So now you look for some type of higher low, a bit like ENTC. That's the same type of entry. Now you can look for maybe a shakeout, some weakness on that gap down. So let's see that if we open weak, you swoosh down below the 21-day mid structure and get right back in. All right, undercut and rally below that pivot right here. That gets me interested. That's where I would like to enter. So long story short, you want to trim into those extensions and reload at the 21-day mid structure. That's how you can build good size over time in your position, just like I built with ARM, just like I'm trying to build with Tesla as well. So I was early, then reloaded here, then trying to reload here. All right, at some point it will stop to work. The 21-day mid structure is not magic, but it does give a good structure to risk against, and that's where I engage. So to answer your question, for me, if it closes below the 21-day mid structure, and you're asking me a question, so obviously I will answer with my rules, right? I will not answer with, oh, I would wait 5 to 10% below the 21-day mid structure. I would wait for 2-3 days, close below, then I would look to close it. No, my rules are what? My rules are, if it closes below the 21-day mid structure, then the trade is off. Not just the HADs, the trade, all right, the whole trade. If it closes super close to the 21-day mid structure, so let's say it closed just a tad below, but has a very strong oops reversal, then I might wait one more day just to see if we can confirm that undercut and rally. But if it's weak, if it's keep building lower highs and close below the 21-day mid structure, then I'm out. All right, that's my rules. All right, so we were at a Rocket Lab in the Teams lab. So yeah, Bloom Energy, you know how I like this one. I added again yesterday, build that higher low. And that's another good example of how I like to build exposure around my core. I was very early in April, then added again, I missed this one, but I caught this undercut and rally of the 21-day mid structure mid-May. Then added another core, trimmed into that extension. Patience, patience, patience. I was not panda patient. All right, I reduced 2 days ago. Maybe I should have not. I broke my rules, but at the same time, I wanted to manage my exposure, my NAIR, my risk. So I'm okay with this. Reloaded on that had yesterday. I had a confirmed daily reversal, and now I have 3 cores with one full position to top it off, and I'm looking to trim again into strength, be patient, and wait for the 21-day mid structure and reload. All right, that's my game. That's how I like to trade. CGNX, it's in Focuslist. Nice higher low in the 21-day mid structure. TTMI looks good. Q, it's in Focuslist. So we have a higher low in the 21-day mid structure. We have a potential daily reversal confirmed yesterday. I would look for the reversal pivot back test for an entry. LTH looks good. Kind of higher lows in the 21-day structure after big trust, inside day. If you're into those outside of tech stocks, that looks good. Oscar, very weak yesterday. I don't like that action. eBay looks good. And yeah, that's about it. You have Tesla as well. I think Tesla is setting up really well today. If the market can hold a bit. All right, so you have that bigger picture. You have that downtrend line breakout, back test, new trend attempt, keep making higher lows in the 21-day structure. That was the reason for my trade yesterday. So that's about it, guys. Game plan for me today. Unless we have some big weakness that I would see as an opportunity. If we have strength today, I'm not looking to add. I had a Tesla just 0.25% of risk yesterday. I'm fine with that. Because my goal yesterday was not to add, but Tesla's looking good and I'm okay with 0.25% risk. And yeah, B, ideally I want to de-risk Bloom Energy, confirming that breakout. And yeah, from there I'm already on margin. Market is extended in price. So I don't want to overcommit. I don't want to push my nair at this point. I want to respect that extension. And yeah, gradually, if we have some more extension in stuff like Harm, like Nebius, I'm looking to use that strength, those extension to trim a bit more exposure and be ready for an eventual pullback. So Art is asking, from an internal perspective, when do you focus more on the NASDAQ versus liquid leader composite? To be honest, I'm still learning to use the liquid leader composite. And right now I'm using both in tandem. Just looking and you will learn to use and use discretion. Trading is not about fixed hard rules. All right, that's for algorithms, and they have their limits. All right, so mid-April. All right, if I was just focused on QQQ, it never gave that oversold condition. But what do I trade? I trade liquid leaders. And liquid leaders were at 3 standard deviation oversold. That's crazy. All right. Same thing with breadth extension on liquid leaders. So when you see that, all right, you don't say, okay, liquid leaders are oversold and very, very, very oversold, but the NASDAQ is not confirming it. So all my rules are only for NASDAQ, so I won't take action. No, we were seeing constructive action in the liquid leaders. Some liquid leaders were shaping up nicely in the 21-day structure. The portfolio was confirming undercut and rallies, upside reversal. And at the same time, we were having that 3 standard deviation oversold signal. So you take action, all right, even if the Qs are not confirming it. So long story short, I'm still using both. And for me, liquid leaders action, my portfolio action is first. And when I see those signal paired with constructive action during that weakness, during that pullback, then you execute. You don't stop yourself just because you don't have a hard signal somewhere in the market. Yes, exactly. Livewire, that's a symbol of -1 standard deviation and 2 standard deviation. And you don't see it in that chart going down to 3, but it was intraday. You can look in the Alex journal back in those days. I remember very well sharing that chart that morning of the gap down that we reached 3 standard deviation at the open. I was all over it. I was like, what the fuck is happening? This is this is so oversold. We need to stay engaged, guys. What date was it? Around the 19th, I think. Let me find it back. All right, and you pair that with, look how credit spreads was looking as well. I remember, I think I talk about it like 10 times this day. Guys, look where we reject on the credit spreads. That's kind of the big structure where the market churn. And look how ARM, that was one of the leader. Look at how ARM was shaping up. That's what I'm trying to explain. Look at Tesla. Look at CAT. There were all backtesting big structure. Nebius, same thing. Okay, so I don't find that. Oh, yeah, right here. So I didn't get the screenshot of the -3 standard deviation, but that's what I shared at the open this morning. All right, so that's what I'm trying to explain, guys. I know it's easier when we start trading to have fixed rules, to have kind of a traffic light kind of system, but that's not how good trading is. Good trading is about factoring multiple information, left and right, price, breadth, internals, liquid leaders, different groups, rotation. All right, it takes time. I understand it takes a lot of time, but that's the skills that you need to acquire. That's why we talk about that each morning, each day, each night in Prime Trading. And that's why I'm trying to state that with this kind of information in those calls, because that's the skills that you need to over time be a good discretionary trader and outperform the market and put up those big returns. And I get it, there's some comfort in hard rules and knowing exactly when I engage, when I disengage, what are those rules, when do I trim exactly to the point. So you see the point. But I firmly believe that if you want to reach those level of competence and returns of those all-EKL, for example, you need that discretion. You need those skills to look at different angles of the market and form that view based on, again, price, breadth, internals, divergence, oversold, overbought, different kind of markets, different groups and teams, those rotation happenings, what happens in the top liquid leaders, etc., etc. All right, so that was the rant for this morning. It needs always at least one rant per morning, right? All right, guys, so any questions? Yeah, please define the question on MRVL because it's not viable here. Very interesting for what? You think buying that here? It's very interesting if you're already in, that's for sure. Or it's very interesting to trim some into strength. That's very interesting. Yeah, wish I were. Yeah, me too. But you never know. That's a name that I should have traded for sure. I don't know why it was not on my radar. That right here would have been the spot. But again, we had earnings, so it was left out of my scan. The best spot would have been in March. That was showing very good leadership in a market that was very bad. That was probably the best entry right here. Then you had to be patient on that shakeout. But if you were able to be patient on that shakeout, then you were rewarded big. That's for sure. All right, yeah, good question for VRT. That's a name that I am watching as well. Look what's in my focus for now. It's not updated, but I still have that name. I want to track it daily. So we have the reclaim. Where did we reject? All right, right into previous swing high. What gets me interested from here is probably some kind of higher lows of the right side as we backtest the 21-day structure and look for some type of daily reversal to confirm the trade. That's what would pull me back in VRT. Keys. Yeah, I don't like to buy kind of a breakout / momentum day right into declining 21-day structure, right? Look in my good book, that's always the same thing. Either that I want to see that big reclaim, then I'm okay to be patient to catch the rising structure backtest. Or like VRT, you reject, form some kind of higher low of the right side, and then you can catch the reclaim. But not going in with a big momentum day right into structure. Yeah, we have pushed nicely, and you have that big structure for a potential breakout on the right side. That's a very nice chart indeed. Indeed. Yeah, same for me. If you already have exposure, now is the time to be patient, to be honest. Like small ads, small trades like I did yesterday in Tesla B, I'm okay with that. But nothing crazy. I'm not looking at new names. I'm really trying to stay within my portfolio, add to my cars as they rotate, come back into the 21 DME structure. I think I have good names, and something to always remind yourself. All right, we like new names, we like new setup. We always think that the grass is greener elsewhere. But if you have yourself some good trades, some good entries, some good leaders that are trending well above the 21 DME structure, for example, then your focus should be to improve your execution, to trade one name very well. All right, so what I mean by that is buying right into structure, trimming into extension, reducing risk, waiting for the stock to pull back into structure, giving you another entry, and then trading around your core like that. All right, make a priority to learn how to trade around a core at perfection before trying to buy everything. All right, if you can do that and really focus on the process of trading well what you already have, you will become a better trader. Obviously, it's important to be in good stocks early on, but if you do, then take an ARM, for example. Learn how to engage early. All right, trim into those extensions. Trim into those extensions. That's an art. Reload when it's basing, when it's forming constructive action. Trimming into extension again. All right, learn that skill of trading around a core, trading a name to the perfection, extracting the most out of one trade before trying to trade everything, especially in an extended market like that. It will bring you patience. Right now, I'm not looking to open any new trades. I'm just looking at my stuff. And my stuff, I only had Tesla, B, and Caterpillar at the 21 DME structure. So I'm not looking to open 60 new positions. All right, I only have 3 candidates. So it narrows my focus. It brings me patience to wait for my stuff to digest, to base, to come back into the 21 DME structure, to show constructive action, and then to add. So that's where patience is coming from. That's the second rant of the day. You've been served. All right, what do I think about NVIDIA? I'm still thinking the same thing. And I don't see yesterday as a bad thing. And here's why. Until we break that base, we're all good. What do I mean by that? We're still building that base. And let's talk base, all right? Nvidia, if you trade around your core, maybe you got in super early on the turn, trimmed into extension, had it back at the 21-day mid structure, trim into those runaway gaps, reload into the 21-day mid structure, base structure back test. That was not really a reason to trim right here, but we're still building higher lows of the right side. All right, and we're still building lower highs on the right side. So what does it mean? It means that we're digesting, that we're basing. All right, that's what I want to see, some VCP action of the right side, basing. Unless we break down from here, that's a bit like this. All right, be patient, let it base, let it digest, let it build the right side. It's not because we have one reversal day that it's dead. All right, it's just building, it's just basing. That's normal. All right, last one, and then it's open time. Whoop, wrong ticker, LQDA. I'm not a fan of buying big momentum like that. Be careful with those cascade down. All right, the only thing that would pull me into this kind of setup would be some kind of whoosh down, upside reversal, kind of shake out below structure, and then you can think that it could act as the first initial low. But then don't expect those kind of setups to shoot higher right away. Likely scenario is it needs time to base. That first low might hold. So you build some kind of lower highs, higher lows. All right, something like that. But that's big momentum. I wouldn't buy right away a big swoosh down to the 21-day mid structure like that. All right, guys, so time for open. I wish everyone a very good day. If you have questions, again, don't hesitate. I will be hanging in the trading pit. And yeah, good luck today. Take care and remember to respect that extension, but be patient. Let your stuff work. Don't be in a hurry to call the end of that trend. All right, have a good day. Cheers. Bye-bye, everyone.